Hey guys, Joel Franklin, market analyst for YouTrading, and in today's video we're going to be taking a quick look across a couple of trade ideas that I'm monitoring at the moment, because we did just have the release of much softer than expected US inflation figures. So let's just take a quick look at that, and then we'll talk about how markets are reacting and what I think I might be about to happen this week. So you can see here the year-over-year rate of headline US core price inflation, consumer price inflation, sorry, fell to 7.1% from 7.3%. From 7.7%. Against expectations for a drop to 7.3%. So a downside surprise on the month-over-month headline reading, and a downside surprise on the month-over-month core reading as well. So we saw quite a ferocious move in response to this data in markets. You can see here, if I zoom out, the dollar got absolutely battered there. You can see, get the S&P 500. S&P 500 rallied very, very hard, but has since pulled all the way back. We'll talk about why potentially in a second. And then I can just show you some other assets as well, like Bitcoin rallied and Ethereum rallied. But let's have a look at some of the trade ideas that I'm thinking about at the moment. Go back to the S&P 500, stick it on one-day candlesticks. Still looks very much to be in that uptrend that I've been talking about for quite some time. This one that I drew up, I think it was probably about a week ago, or a little bit more than a week ago at this point. If I also put the 200-day moving average in, you can see that we broke. Let me just put that in. You can see that we broke above the 200-day moving average, but we're now back below it again. But I'm thinking this pullback has to do with a mixture of profit taking and caution ahead of tomorrow's Fed meeting. Because remember, we do have the Fed tomorrow, and we don't know how Fed Chair Powell is going to react to this inflation data. Is he going to try and push back on any optimism about the fact that, yes, we did have a downside inflation surprise, but that doesn't mean the Fed's job is done. More interest rate hikes are still going to be needed. Is that going to be the message he gives across? Markets are expecting another 50 basis point rate hike, and they're going to be looking out for that tone from the Fed on, what they're expecting to be doing with rate hikes in the coming weeks. I'm thinking, though, that there's got to be some acknowledgement from the Fed of this softer than expected inflation reading. And I think that could potentially spur another break back above that 200-day moving average, which looks like it's there to be broken above now, and a continuation higher within this uptrend. So that's what I'm looking at with the S&P 500. It's kind of a similar story here for the DXY. I think we're in a downtrend, and I think that downtrend is going to continue. Depends how you want to draw it. It's not the nicest downtrend, but I think you're looking at something along these lines. And I think for the same reasons why I think stock's going to continue to rally, I think the dollar's going to continue to decline. That recent rejection of the 200-day moving average is big, I think, technically speaking. It's going to encourage more sellers. The fundamentals seem to be pointing in this way. So yeah, that's what I'm thinking about this week, guys. Hope you'll enjoy the video, and I'll see you all in the next one.